Hello and welcome to another financial analysis video. Today I'm talking about AT&T, who interestingly enough just released an 8K updating their Q3 guidance, giving good free cash flow estimates, and really saying that things are going well with the integration with DirecTV. Now, AT&T is going to announce their next earnings on October 22nd, so I'll have to put that on my calendar because I am a shareholder of AT&T. I bought pretty much at the current levels, around $32 a share, near the dip. And my mindset there was when we had that big sell-off, I had a decent amount of cash, and I decided that I was going to be bullish about the market, but I wanted to be conservative. And so why not go with a stock that has 40 consecutive years of dividend growth? I mean, just a dividend stalwart, and almost 6% dividend yield. In addition to that, and I'll go back to the snapshot, at the time they were near the 52-week low. So for me it was perfect, because if the stock goes up or gets near its 52-week high, it's an easy little 10%. I can get out before or right after the dividend's paid. If not, I hold on to it and I earn dividend income. So I'm happy with my decision to buy AT&T, but I'm even happier to hear that the operation is going well. Let's take a look at some of the operational statistics, and I'm going to be honest with you, I really haven't taken a look at them yet. Now this is a chart you haven't seen from me too often. I like to track earnings versus estimates, and it looks as if, AT&T has made or beaten half of the recent earnings estimates. They missed a couple in a row, and they missed it by a penny, which isn't too bad, but I like to use that to build credibility towards future earnings estimates. And as you can see, they are expecting a dip in future earnings centering around Q4 of 2016, Q1 of 17. I don't know if analysts are, or if there's a plan for a restructuring there. I don't know what the exact nature of that is. I'd like to fix this chart for a second, get away from that dip so we can see the actual trend. There it is. Solid revenue growth from AT&T. It's not knock your socks off revenue growth, but on a trailing 12-month basis, in 2 years, they've gone from $127 billion to $132 billion. So it's really a nice, steady growth. Their cash flow position has slightly weakened, but at the same time, you're still looking at a company that's bringing in about $12 billion in free cash flow, and that is sufficient to pay a $9.7 billion annual dividend. So from a free cash flow standpoint, they are easily able to pay for the dividend, and I think they will continue to do so. Now, don't expect huge dividend raises over the next several years. In fact, I'm not expecting anything larger than a penny per year, quarterly. So 4 cents per year, if you will. So very little increase between now and really the start of the next bull market, which will be after the next recession, whenever that is. I don't have aspirations there, but I do have aspirations about the dividend, and the dividend being strong. And even if you look at a PE ratio here, you can see that the company really, well, I mean, obviously not a lot of earnings growth necessarily, but on a PE level, it's trading at close to a 52-week low in forward PE. It's a little bit above that on the trailing PE side, but really, I mean, AT&T, in my opinion, is a solid buy at this point, and especially if the market takes another dip again. We could see that dividend yield easily go over 6%. Again, a nice, safe place to be in an uncertain market. I hope you enjoyed this video, and happy investing.